Feel the breeze where the dreams don't stop. Sailing high in the metro hub spot. Where next metro where the stories flow. Casting light on the life we know. Talking homes, talking lives we build. Every episode leaves you thrilled. Kick back, relax, let your worries go. You're tuned in now to the Metro Show.
Welcome to the Deep Dive, and a special welcome to our Remax Metro agents listening in. Today, we're really getting into something crucial for all of us, agent commissions, especially with, all the changes lately. We're going to dive deep into some new data, some analysis around the NAR settlement, and this whole discussion on buyer agreements.
That's right. We need to get a clear picture.
Yeah.
So we're digging into a Federal Reserve paper. It's called Commissions and Omissions, Trends in Real Estate Broker Compensation. And also a really fresh report from Redfin, literally just out, May 16th, 2025. The goal here is really to unpack what these reports are telling us about where commission rates might be heading. Considering buyer agreements and the NAR settlement, it's all about keeping you, our Remax Metro team, informed ahead of the game.
Okay, perfect. So let's start with that Fed paper. It takes a longer view, right? Looking back at historical trends.
Yeah, exactly. And what's really fascinating is their long-term perspective. Their research shows that buy-side commission rates, they've actually seen a gradual decrease since way back in the 1990s. We're talking from roughly 3% back then down to maybe around 2.7% in the 2020s.
Okay, 3 down to 2.7. So a slow downward drift. Now, the big question, I guess, is why? Did those mandatory buyer agreements that some states introduced have anything to do with it?
That's the logical question, isn't it?
Yeah.
And the Fed looked specifically at that. They examined those 15 states with mandatory buyer agreements, some going back to the mid-90s. And their conclusion, it was pretty clear that modest decline, it's not because of the buyer agreements.
Oh, wow. Okay, that is surprising. I think a lot of us might have assumed otherwise. So if it wasn't the buyer agreements, what did the Fed think was pushing those rates down, even slightly?
Well, they pointed to broader economic factors, mainly rising home prices, and also improvements in technology. Think about it, right? If house prices shoot up, even if the commission rate dips a little,
the overall payout is still higher. Makes sense.
Exactly. The agent can still earn a substantial amount. There was actually a quote in the paper about this. They said something like, when house prices are higher relative to consumer prices or prevailing incomes, real estate agents may be more willing to work for lower commission rates.
Since the higher selling price offsets the lower rate. Yeah, I remember that. It's about the total value.
Precisely. It frames it really well.
Okay, so that's the historical backdrop. Very useful. Now, let's shift to the really recent stuff, the NAR settlement. The Fed paper touched on that too, didn't it? Even though it's early days.
Yes, they did offer some initial observations. They noted that after the NAR rule changes kicked in around August 2024, buyer agent commissions seemed to stay at, quote, relatively high levels. Maybe some small dips here and there, but nothing dramatic right off the bat.
So despite all the headlines and the rule changes, the Fed's initial look suggests maybe not a massive immediate impact on rates.
That seems to be their read based on that early data. Yes. They actually concluded the policy changes might not have a, quote, material effect on rates, at least in the short term. But, and this is a big but, they were quick to point out there's still a lot of uncertainty looking forward.
Uncertainty, like what specifically were they cautious about?
Well, they acknowledged that the settlement could lead to more substantial changes to business models and agent commissions going forward. It's just not clear yet. And they highlighted things that make it tricky to predict, like agents potentially sharing commission info off the MLS.
Right, outside the main platform.
Exactly. And also NAR's sort of relaxed, clear cooperation policy, the one allowing delayed marketing. The Fed basically said these kinds of adaptations make it really difficult to predict the long-run effects.
Okay, so the Fed's view is, historically, buyer agreements weren't the driver, tech and prices were. Immediately post-NAR, rates seemed fairly stable, but the long-term game, still very much unfolding.
That sums it up pretty well.
All right, let's bring in the Redfin report then. This is super current, May 2025 data. What's the snapshot they're giving us?
Yeah, this gives us a look at the first quarter of this year, 2025. Redfin found that the average buyer agent commission, at least in transactions involving their agents, was 2.4%.
2.4%. And how does that stack up against, say, late last year, right after the NAR changes took effect?
Well, this is where it gets really interesting, especially for us at Remax Metro. That 2.4% average, it's actually a little bit higher than the average they saw in the third quarter of 2024. Back then, it was 2.36%. So a slight increase, not a decrease.
Huh. A small uptick. Okay. Now, the Fed mentioned the link between home prices and commission rates. Did Redfin find anything similar in their Q1 data? Did rates vary by price?
They absolutely did, and it really backs up what the Fed was suggesting. Redfin's data showed a pretty clear connection. For the higher-end homes sold for $1 million or more, the average buyer agent commission rate was lower, 2.17%, and that was actually down a little bit from Q3 2024 when it was 2.22%.
Okay, so lower average rates on the luxury end, more or less. What about, the more typical price points? Homes under, say, $500,000.
Right. For those lower-priced homes under $500,000, Redfin found the average commission rate was higher, 2.49%, and that was up from 2.42% in Q3 2024. And even in the middle range, $500 to just under $1 million, there was a small increase, too, from 2.27% up to 2.29%.
So it really depends on the market segment, doesn't it? Higher rates on lower-priced homes, lower rates on higher-priced ones, generally speaking. That's key for our Remax Metro agents dealing with diverse clients.
Exactly right. It's definitely not a one-size-fits-all picture.
Okay, now the other huge question swirling around the settlement, who's actually paying the buyer agent commission now? Are we seeing sellers step back? What did Redfin find?
Well, according to Redfin's report, the dominant trend, for now at least, is that sellers are largely still compensating the buyer's agent.
Still the prevailing model. Okay, that fits with the commission rate staying relatively stable, I suppose.
It does seem consistent, yes.
Did Redfin offer any thoughts on whether that might change? Any predictions?
They did touch on that, and it's definitely something to watch. They quoted one of their agents, Charlie McVeigh, out in Portland. He said, sellers don't seem to have any issue paying a buyer's agent commission, for now. However, he also raised a really important point.
Which was?
He suggested that if the market gets really hot again, like think back to the crazy bidding wars of 2021, 2022.
Oh, yeah. A strong seller's market.
Exactly. In that kind of market, McVeigh thinks sellers might get, more tempted to offer less to the buyer's agent or maybe even nothing.
Right. If they know they'll get multiple offers anyway, why offer the extra incentive? That could definitely change things.
It could. And McVeigh pointed out who that might impact the most.
Let me guess, first-time buyers.
You got it. If buyers suddenly have to come up with the commission money up front, on top of down payments and closing costs, well, first-time buyers, who are often already stretching their budgets thin, would likely find that the biggest hurdle. It really highlights, I think, how important it is for us, especially here at Remax Metro, to keep demonstrating and communicating our value to buyer clients.
Absolutely critical. Okay, so let's try and wrap this up for our Remax Metro listeners. What are the key takeaways here? It seems like, 1, history suggests buyer agreements weren't the main thing driving commission changes. Rising prices and tech were more influential, according to the Fed.
Right, that's a big one.
2, the initial data after the NIR settlement from both the Fed and Redfin, it doesn't show a massive immediate drop in commission rates. They seem relatively stable overall, maybe even up slightly on average in Q1, according to Redfin.
Correct. Stable, but with variations depending on the price point.
And 3, sellers are, for the most part, still paying the buyer agent commission.
Yes, that's the current dominant practice.
But, and this is the crucial but that could potentially shift, especially if we hit another strong seller's market down the line.
That's the potential future dynamic we all need to keep an eye on.
This is a really valuable context for all of you navigating this evolving landscape. Understanding these numbers, these trends, it's essential.
It really is. Knowing the factors at play, the current reality, and the potential shifts helps you strategize, advise your clients effectively, and adapt your business.
Couldn't agree more. And that leads perfectly into a final thought for you, our Remax Metro agents, to chew on. If that trend of seller-paid commissions does really start to shift in a hot market, what are the long-term implications? For buyer representation, for your own business models, what kind of maybe innovative strategies might you need to think about now to make sure you can still provide that incredible value and support to buyers, even if they might need to compensate you more directly? Something important for all of us to consider moving forward. Thanks so much for tuning into this deep dive.